Hello traders, in this video I will show you why one H4 candle is enough for you to excel in the forex market. I'll be doing that by showing you how to apply the daily candle close strategy in the H4 time frame in order to create multiple trading opportunities. I've shown you how you can maximize profits from the forex market by trading the daily candle close strategy, all right, in my previous videos. But now I want to show you how to create multiple trading opportunities in any given market day by applying the same principle of the daily candle strategy on your H4 time frame as your setup time frame. Now, before we proceed, you need to understand the candle anatomy. On my left is the bullish candle, while on my right is the bearish candle. Now, for a bullish candle, the candle opens here and trades low, trades down low, trades up, makes a high, and now closes right there. So in other words, the bullish candle opens right there, trades low, trades high, and now closes for a bullish candle. So we have the open, low, high, and close for a bullish candle. Now for a bearish candle, a candle opens here, trades high up to this point, and now trades low, and now closes here. So in other words, you can say that a bearish candle opens in this form, trades up right there, makes the high of the candle, trades down low, makes the low, and trades up and closes. So for a bearish candle, you have the open, the high, okay, the low, and the close. All right, that is in contrast with the bullish candle. So that is the candle anatomy. You need to know the candle open, you need to know the candle high, you need to know the candle low, and you need to know the candle close for either a bullish case or a bearish case. This is needed in this strategy, okay? Now, this strategy is based on taking trades from the zone around the intersection of the previous H4 candle close and the current H4 candle wick, and which some people call shadow. All right, now for a bullish scenario of this strategy, you see that this is the previous H4 candle, all right, and this is the candle low. This is the previous H4 candle low, and this is the current H4 candle. All right, so and this is the high. So what you do is this: first thing you need to do, you allow the previous H4 candle to form. Okay, you have seen a previous H4 candle, and now if this were a bullish candle, you discover that this is the open, this is the low, and this is the high, and this is the close. Okay, so this is the close for a bullish candle. So now once the next candle starts forming, all right, once this H4 candle has finished its activity, now the new H4 candle starts forming in the H4 time frame. All right, so what you need to do is to step down to lower time frame. So this is your previous H4 candle. All right, this is your previous H4 candle here, and in this previous H4 candle, it had the candle on H4 time frame. So once this H4 candle on H4 time frame has finished its activity and a new candle starts forming, you step down to lower time frame. So when you step down to lower time frame, what are you going to look for? You are looking that the market pulls back to this point. You are looking for a demand zone that would form around the intersection of the previous H4 candle close and the wick of the current H4 candle. And now you're looking for a demand zone, and in that case, you want the market to pull back to the intersection region. This is your trade entry location. You are looking to take trade from this zone, and that is most likely a demand zone. So once that happens, you look for entry confirmations on lower time frame and you get into the trade. So you are looking for the setup on H4 time frame. Okay, this is the previous H4 time frame, and you know that this has completed forming, and now a new H4 candle has formed. And once that happens, or rather is forming, you now step down to like 5 minutes time frame, and on this 5 minutes time frame, you are looking for your demand zone. Okay, you're looking for your demand zone on the 5 minutes time frame. Once you have seen your demand zone, you are looking to get an entry confirmation, most likely on your 1 minute time frame, and then you get into the trade. Okay, so that is how you do. Well, don't worry, I'm going to show you such examples. So but now for a bearish scenario, this is your previous H4 candle, and this is the candle high, okay, right there. So, and this is the candle close. So we are looking to get a trade set up on the intersection of the candle close and the current H4 candle. So this is your current H4 candle that started forming. So you are most likely looking for market to pull back into this zone so that you can take a sell trade there on a lower time frame. So on your H4, your previous H4 candle has closed. Now you start having your current H4 candle, okay, that starts forming, and now you need to step down to the 5 minutes time frame to get a supply zone from which you look to take a trade. And then when you see a supply zone, when price pulls back to the supply zone, you step down to your 1 minute time frame in order to get your trade entry confirmation. Don't worry, I'm going to show you right on the chart soon. You can see right there that how the market came back and you are taking a sell trade from there. Now, mind you, here as well, sometimes the market could actually give you the sell around here. But on no account should you trade after here, because after here, the market could do a retest and buy instead of selling. So the bullish scenario, the market could give you a setup around the intersection region here. Sometimes the market could still give you a setup around here. But once the market breaks this previous H4 candle low, there could be a test, and this could be a sell instead of a buy. You are looking to take a buy for this bullish scenario setup, okay? So now, where is supposed to be your take profit? Your take profit should be at the high that was created before the pullback, okay, into our entry zone. And your stop loss would be just a few pips away from the refined or unrefined demand zone, okay? And in this case as well, you are looking to have your final take profit, okay? And we don't look to take trades outside from here, because there could be a break and retest and a buy instead of a sell that we have that we plan to take, okay? And your stop loss will be just few pips outside the refined or unrefined entry that we got into the trade. So now, what are the trading rules? So the trading rules of this strategy: the trade timing, just trade this trade at the London or New York session. Avoid the Asian session, avoid the Sydney or the Australian session. Any H4 candles around the London or the New York session is appropriate for you to see these setups. Multiple H4 candles would form at the London and the New York sessions, okay? So that is your trade timing. That's the period for which you take this trade. Now, the trade entry area, as I've said, is just at the pullback to the demand or supply zone created at the current H4 candle on the lower time frame. That is your trade entry for this strategy. Now, for the entry method, you use your smart money entry confirmations method. You're talking about the change of character and the return to order block. Now, if you don't want to use the smart money entry confirmation method, you can use like the double top formation or the head and shoulders formation, okay, or the inverse head and shoulders formation for your entry. But I would prefer you use the smart money entry confirmations method or the break change of character and the return to order block. I have actually made videos on smart money entry confirmations method. I'll put the link in the description box of this video so that you can be able to be up to date about how to enter trades the smart way. Now, for stop loss, I've showed you that the stop loss should be a few pips outside the refined or unrefined supply or demand zone. Don't worry, I'm going to be showing you chart examples so you can understand this clearly. But before we proceed, if you're yet to subscribe to this YouTube channel, please kindly do so. All right, give this video a thumbs up if you're finding value from it. Also, comment down below in the comment section to let me know what other kinds of video you want me to create for you so that you can improve in your trading. If you're also yet to join our free Telegram community, the link is in the description box of this video. In our free Telegram community, I share free setup and analysis that you can use to trade on your own discretion and become a better trader. Also, if you want me to train you, to mentor you one-on-one on how you can become a very profitable trader, regardless of how long you spent trading the market, I can help you. Send me a DM. My DM link, free Telegram community. And the link to the free Telegram community is in the description box of this video. All right, so what about the trade entry rules like the take profit? For a buy scenario, the high created at the current H4 candle before the pullback would be the final TP, just as I've demonstrated before in a while ago. And for the sell scenario, the low created at the current H4 candle before the pullback would be your final take profit. Now let us see some examples. Now you can see this is a H4 time frame of the GBP USD chart here you can see this if this were to be my previous H4 candle, now this is supposedly my current H4 or candle. Now let us see, and this is the intersection. All right, this is the intersection. This is the candle close of the previous H4 candle, and this is the intersection with the wick. So this is where I'm supposed to look for my setup. Okay, so you just place a horizontal line. Okay, you place a horizontal line. Look at this horizontal line. You place it on once the candle close, once the H4 candle has closed and a new H4 candle has started forming. So you now step down to 5 minutes time frame. So you shade it, you just shade the area as I've done here. You step down to 5 minutes time frame. So on a 5 minutes time frame, this is it. This is the intersection of the H4 previous H4 candle and the current H4 candle that is forming. So all right, so you see now, you can see that there is a zone. This is a zone. This here is a zone which we look that the market should return to in order for you to take a buy entry trade from there. Let us see. So this is actually the zone. So you mark that zone and you extend this rectangle there and waiting for the market to pull back. So we are assuming that this section has not formed. So your market should pull back to this point so that you can now look for entry confirmations right there to enter. So I will step down to 1 minute time frame. This is 1 minute time frame. On a 1 minute time frame, you can see this liquidity taken out. All right, this is 1 minute time frame. You can see, and the same chart. So as liquidity was taken out, the market pulled that back into the zone, gave us our change of character right there, change of character, and now return to the order block, RTO, return to the block, and now a trade entry is supposed to be taken. Your stop loss would be few pips outside this zone. All right, few here, it could be here or here, and your first take profit would be maybe like a 1 to 2 risk to reward ratio, like here. And your second and your final take profit could be here, all right, which is the final point that the market went to before it pulled back. Okay, the highest level or the candle high for the current H4 candle before it pulled back into our zone. And you can as well trail your stop loss up to this point. Okay, now that is it for a buy scenario example. Now for a sell scenario, you can see here, this is supposed to be my previous H4 candle, and now once this current H4 candle starts forming, I'll place a horizontal line. I'll place a horizontal line to mark the close of the previous candles. Okay, horizontal line there, so that I would know where I'm looking at. And now I'm looking at a setup around here, like sell setup, like a supply zone around here on a lower time frame that will signify my trade entry. Okay, let's step down to 5 minutes time frame. On a 5 minutes time frame, you can see this is the previous H4 candle right there, and you can see that a zone was formed right there. So this is my zone. So I was looking at market to come to the zone and give me some trade entry confirmations in order for me to take a sell trade. The zone clearly on a 5 minutes time frame and step down to 1 minute time frame. So the 1 minute time frame, you can see how this worked out. Okay, so the market tapped into the zone, broke down, gave us a change of character, and now came back into the zone and sold right there. So here could be my refined stop loss, while my unrefined stop loss will be there. Okay, and your first take profit will be just like 1:2 risk to reward ratio, and your final take profit should be the H4 candle low before the pullback into the zone. This should be your final take profit. But as well, you can as well trail your stop loss up to this point or here in order for you to gain more from the market. Okay, so you just need to backtest this strategy and see how it works. I'm just trying to create multiple trade opportunities for you instead of waiting once per day, by doing the previous day's high and low. You can as well use this strategy on a daily basis, intraday, to create multiple trading opportunities, because H4 candle happens several times in a day. All right, we have several H4 candles in a day, so that will help you to maximize your trade entry opportunities. But just try to look for H4 candles in your London session and also at your New York session. Any of those would work for this strategy. Now let's seek some questions or frequently asked questions that you always ask me when I make such a video. You will say, what if H4 candle has no wick. Okay, that is not a problem. The current H4 candle has no wick. So what you need to do is, in that case, just look for a demand zone. The most important thing is for you to identify the candle, the H4 candle close on the on the H4 time frame, the previous H4 candle close. Just mark that point, and once the current H4 candle starts forming, okay, you step down to lower time frame and you look for a demand zone or a supply zone. If it's for a buy scenario, look for a demand zone. And regardless of the week, you just look for a demand zone around that intersection, around the close of the previous H4 candle. You would definitely get a setup regardless of the week. Now, second question is, what if the previous candle is bullish and the current day's candle appears bearish? And what if the previous H4 candle is bearish and the current H4 candle appears bullish? Now, there really won't be any trade, okay? But then you need to understand that this is a trade continuation strategy. Ensure that previous H4 candle has the same trend as the current H4 candle. That is to say, if the previous H4 candle is bullish, do not attempt to take a sell trade on the lower time frame. That is to say, okay, if you cannot find a demand zone on the lower time frame, if the previous H4 candle was bullish, you don't apply this strategy. There could be other strategy you can use, not this strategy. Now, if the previous H4 candle was bearish and you step down to lower time frame and you saw a demand zone, you are supposed to take a supply zone trade or a sell trade, okay, that aligns your trade on your lower time frame should align with the trend of the previous H4 candle. Okay, that is important. All right, so now the third question you always would ask is, what if price is ranging or consolidating on the H4 time frame? Now, you need to understand that this is a trend continuation strategy and there is a high probability if the current H4 candle is bullish, all right, and the two previous H4 candles are bullish as well, and same applies to the bearish scenario. So you would want to ensure, just as I've said in a while ago, that your trade you are taking on your lower time frame should be in the same trend as the previous H4 candle. If the previous H4 candle was bullish, and in fact, if you have two bullish candles before the previous H4 candle, that will be also add to the probability of the trade working out, because they are in the bullish phase. Okay, you'll be on a bullish phase. So you ensure that if the previous H4 candle is bullish, you are taking bullish buy trades on a lower time frame. And the previous H4 candle is a bearish, you're taking sell trades on a lower time frame. If the previous H4 candle is bullish, you're taking buy trades on a lower time frame. I hope that is clear. Now, for the next question will be, what if price didn't pull back on the demand or supply zone you identified on a lower time frame? Now, you wait for another setup, okay? So it can happen sometimes that you identify a zone that you want to enter a trade and price did not come to that zone for that day. So no problem. There are multiple opportunities. You look for another setup, okay? Because you definitely most likely you're supposed to take trade from the demand or a supply zone. Now, another question will be, what if price pulls back beyond the previous H4 candle for either a buy or a sell scenario? I told you, if price pulls back beyond the previous H4 candle, all right, it means that there could be a break and retest. Okay, if there is a bullish previous bullish candle and price pulls back beyond, okay, that could be the market could want to sell. There could be a reversal in trend instead of having a buy setup, so you don't trade. There could be a retest and continuation in the opposite direction of the intended trade direction. So I've actually explained this on a while ago on the chart. Okay, so please, if you're yet to subscribe to this YouTube channel, please kindly subscribe to this YouTube channel. Give this video a thumbs up in order to encourage me to make more videos that will help you to become a better trader. Share this video with your friends. Right, give this video a thumbs up, share this video with your friends, and comment down below in the comment section to let me know if this video was helpful and what more questions, what more areas you want me to clarify about this strategy or any other strategy or any other subject as regards trading. All right, if you are also here to join our free Telegram community, kindly do so. The link is in the description box of this video. It will help you to improve your trading career. As well, if you want me to take you by the hand and help you to become a profitable trader, I do one-on-one mentorship, and the purpose of that one-on-one mentorship so that you can learn how to become better. I will help to correct your deficiencies. Even if you have spent years trading, I will help you to become a profitable trader by giving you guides and clues and information, and also show you my strategies and expose secrets that you need to know in order to become a better trader. All right, so give me a shout out, give me a DM. My DM Send me a message on my DM if you want me to mentor you one-on-one. And my DM contact is in my Telegram community. All right, till I come your way next time with another useful content. Do have a wonderful day ahead.